Good evening, students. Welcome to this discussion on audit. So we have been discussing about different aspects in relation to different types of entities. So far, we have spoken about a lot of entities, whether it is about government, company, government setup, local bodies, NGOs, wherein we have also talked about trusts, societies. Okay, so there are various aspects in relation to all of these different types of entities, and I believe that so far you would have understood as to what is the context of this particular chapter. So today we plan to continue our discussion, and hopefully we should also be able to wrap up our discussion, okay, in terms of this chapter. Yeah. And some of the entities which are now left, which we are planning to cover today, they are not going to be too technical in terms of the legal requirements. Yeah, if you remember, we talked about government setup, we talked about local bodies, we also talked about cooperative societies. In respect of some of these entities, there were certain legal requirements which I told you need to memorize. Huh? Okay, so some level of cramming, you can say, is required here. Okay, of course, you need to understand that, but you also need to learn all of those legal requirements. But most of the entities that we are going to cover today, they are all going to be quite generic in nature. Therein, even if we'll discuss some of their features, some of their legal requirements, they are going to be quite common. Common means which you understand about a lot of companies or any other entity. So that's going to be the approach that we are going to continue with. Yeah. So I believe it's going to be a quite light session, but at the same time, what we should also try to do is we should also try to test our knowledge. Okay. So for example, if you say that some of these audit procedures or some of these requirements are going to be quite generic in nature, so what we'll do is we'll just also keep picking up questions so that you can test yourself whether you are able to get on to those common points or not. Yeah, which is again possible if you would have revised all of those things that we have covered in the past. Number one. Number two, if you would have understood about this new type of entity that we are going to cover today. So if you'll have a mixture of these two, then of course you will be able to sail through this. Otherwise, there again, you might face challenges. So let's see. Okay. So that's going to be the endeavor. So that's how I'll just try to approach today's session. Okay. So now moving further, what we will do is we'll just talk about sole trader. Okay. Now, as the terminology suggests, we are talking about a sole proprietor here. Sole trader means we are talking about sole proprietor. Yeah. Can you give me some understanding of a sole proprietor or a sole trader? So without looking at anything which could be there in the study material, anything which you can see on the slide right now, what is it that comes to your thought, your mind, the moment we talk about this sole trader or the sole proprietor? I'm talking about the understanding of the type of this entity. Great. I think a very good example has been shared by Tambeshwari. It's one person company. Of course, you can just relate a lot of requirements in terms of the business model to one person company. Yes. Then I think Pallavi is saying who need not register and only one person is the owner. Great. Srini is saying individual who is doing the business means it has to be one individual carrying out the business. Yeah, and I can see similar sort of responses from Bhaskar, Nancy, Ritika, Pranav. Great. Okay, so now, as you have rightly understood, that we are now talking about a sole trader. Now, what is a sole trader? Very simply, you can say we are talking about a proprietor right now. Say, for example, I decide to get into a business, okay, and I don't have any plan to get into a partnership firm or to incorporate a company. So what can I do? I can just start get into my own business wherein I will be the owner. Okay. But at the same time, I'm not getting myself registered anywhere. Yeah. Now, what do you mean by I'm not getting registered anywhere? Means I want to carry on my business as a proprietor. Yeah. So that's the understanding of a sole trader. Now, in this case, when I'm not getting myself registered anywhere, again, depending on various legal requirements which could be there, one of the legal requirement will automatically get triggered. And that is something which applies everywhere. What is that? Income tax. Yes or no? So income tax is something which can come anywhere. Yeah. So similarly, if I am working as a sole trader or if I am a sole proprietor, then what will happen? Anything which income tax requires, that is something I'll have to follow. Otherwise, not. Okay. So that means some of the things which would be relevant from the taxation perspective, I will have to do that. Okay. Now, if you are talking about a sole trader, now because it's not registered anywhere, and I believe that we are talking about those situations wherein the tax audit also doesn't get triggered, then what will happen? There's no legal obligation in respect of what? Audit. Okay. Yeah. However, as we discussed, that if the turnover crosses a certain criteria, which you must be knowing under income tax, okay, or maybe if any sort of audit is required because of any other regulation, then such individual may be required to get the accounts audited. Okay, now what could be an example? As we discussed, tax audit could be there. Okay, or maybe the bank requires audit to be carried out. Why? Because you want to get into a loan. So many a times bank asks for the audited set of financial information. Okay. Now, if in case the auditor is required to be appointed, of course, if the audit is required, then what will happen? Now, if you'll talk about appointment of the auditor, okay. Now, in that case, appointment of the auditor will be done by whom? Because it's only one individual who is running the company. Of course, he can have a lot of employees, but who is the authority? Who is the in charge? It's the individual. Yeah. So that's why that individual, or you can say sole proprietor, okay, he will be the one who will be appointing the auditor. Okay. As far as that auditor is concerned, that auditor will have to take care of a lot of independence requirements which could be applicable. Yeah. Now, in terms of independence requirements, we are talking about all of those requirements that the auditor will get appointed. He will understand whether he should take up the audit or not. He should do the risk assessment. He should also be talking to the previous auditor. Yeah. All set of those procedures which are required to be looked into before the acceptance of any audit. So that is something that auditor will also be required to do. He will also be required to follow all of those things. Okay. All right. So I can see this query coming up. Shini is asking, sir, for sole trader, Companies Act is not applicable? No. Because we are talking about a proprietor which is not registered anywhere. So what does it mean? Under the Companies Act also, it's not registered. Of course, there can be one situation of one person company, but that is a company. And we are not talking about any company here. Yeah. So if it's not a company, so the provisions of Companies Act will not apply. Yeah. Okay. All right. So then I think I have this query coming from Sai. So he's saying, I think he's talking about one question. Okay, Sai, I would request you to please stay on the context. Huh? So I believe your query pertains to some other topic. Okay, so let's do one thing. Let's pick up this query towards the end of the session. Yeah, so that we can just stay on the concept that we are discussing right now. Yeah, otherwise we'll have to digress. Fine. Yeah, but of course, please repeat this once we are done towards the end of the session. Okay, that is when we'll get into this. Now, as regards the auditor, we have understood as to how the auditor will be appointed. Now, let's also try to get into some more aspects around the audit of a sole trader. So I think we also have one very small example that we can just look at now. Sole proprietor can stipulate that only a partial audit shall be carried out, that certain parts of the accounts shall not be checked, or that auditor shall also prepare the financial statements. He can also decide whether the audit shall be carried out continuously or at the end of the year. Okay, now, when it comes to the sole proprietor, and we are talking about a situation wherein the audit is not mandated. Okay, now at times what may happen is maybe the proprietor wants specific areas to be tested. Okay, something similar to, you can say, performance audit, something similar to, you can say, some of the aspects related to management audit, or you can say internal audit. Yeah, for example, say inventory is one area over which proprietor wants to have more control. He wants to get this verified. So what can he do? He can ask the auditor. Means he can appoint the auditor only for the purposes of inventory verification. Why? Because it's for a specific purpose. Yeah. So now, because this audit could be carried out for various purposes. Yeah. So that's why, depending on the scope which is there, that is what the auditor will have to test. So that means we are not talking about the audit of financial statements always. It could be in relation to some specific aspects, or it could be a audit for some limited areas as well. Fine. Now, when it comes to the appointment of the auditor, we have discussed that when the auditor will get involved in terms of the audit. Now, because he is getting appointed as the auditor, and because he is required to provide the assurance services. Assurance services means he will be performing the role of our audit auditor. So that's why he need to be very, very clear in terms of the ethical requirements, independence requirements. Okay, so all of those requirements become important. Plus, because it's a specific audit in most of the cases, specific audit means it is required to be done as per the requirements of the proprietor. Unlike an audit of financial statements. See, when it comes to a statutory audit, when the audit of financial statements is required to be carried out, therein the scope is quite standard. Okay, scope will not be defined. Why? Because the auditor will come, auditor will have to express an opinion on the financial statement. So that's why that is considered to be a standard scope. But if the scope is not standard, then what is important? Important thing is to understand the scope. So there should be a clarity in terms of what is required to be done. Who will do that? What is going to be the management responsibility? Yes or no? Yeah. And of course, what are going to be the deliverables? What is going to be the information to be provided? All of those things, therefore, are required to be put down in the form of an agreement. And what do you call that agreement as? Can you tell me? What do you call that agreement as? Over to you quickly. So the agreement that you will put down in terms of most of these points, what do you call that agreement as? Very good. Shani says engagement letter. Yes. Okay. So now this engagement letter, similar to what you see in case of companies, that is also required. Yeah. Plus, there are various other requirements. Once the engagement letter is in place, then the auditor will get on to the planning. Yeah. Now, in terms of planning, what will he do? Let's suppose it's the audit of financial statements. So he'll be looking into the risk areas, he'll be looking into materiality, he'll be looking into the timelines, he'll be looking into the past year issues. Yeah, that is when he'll get into the controls, he'll get into the substantive testing, and of course, then he'll express the opinion. So now the remaining procedures are very much similar that you'll see in case of any other entity. Okay, yeah. And there is also one type of entity that is called as firm. Now, what do you mean by firm here? Firm means a partnership firm. Okay. So, what we are going to do is we are going to pick up a lot of points in relation to the proprietorship as well as partnership firm together. Yeah. So, what I'll do is I'll just now move on to the partnership firm. Okay. Now, I'm sure that you must be knowing about a partnership firm. Okay, somewhere in accounts you must have covered this. You may be knowing about it. You may be knowing about the accounting requirements. You may be knowing about the features. So, can you give me your understanding? Can you please share your understanding of the partnership firm to begin with? Because as we have discussed so far, yeah, that if you have the understanding of the entity, then I think the next part around the audit becomes very, very simple. Yes or no? Yeah. So over to you. Tameshwari says, wherein the liability is limited. Are you sure? Nitin says, when two or more partners are there. Pallavi says, they share profits on the basis of certain ratios. Very good. I think same is the understanding from Srini. Okay. Nitin says, unlimited liability is there. There again, are you sure that it will always be there? Ratimalni says two or more persons will be there. Yes, of course. Kasak says partnership firm is registered. Very good. Under the Partnership Act. Okay, they will have a deed of partnership. And LLPs are also included in this. And what do you mean by LLP? Limited liability partnership. Limited liability partnership. So limited liability partnership or LLP, you can say, is also a kind of partnership. Okay, it's a structure of partnership. But in this structure, liability of the partners is limited. Okay, we'll talk about that slightly later. Okay, then I think Dilip says business which is carried on by all or any one or two of the partners. Yes, that's correct. Then I think Pallavi says it may or may not be registered. Yes, that's correct. Partnership is not necessarily required to be registered. But of course, LLP is registered, but LLP is something we'll take up later. Yeah, we'll move on to that. But let's talk about partnership in general. Okay, now, what is a partnership firm? Very simply, when there are two or more persons who have come together. Okay, two or more persons who have come together to get into a business. Now, that is when you call a partnership. So, what will they do? when the two persons are coming together, so they will have an understanding document. Yes or no? Because if persons are going to work together, so what will they do? Every time they will get into an understanding. Great. So let's try to understand the structure first. Say there are three persons. Okay. A, B, and C. These are the three persons. They want to work together. Yeah. So what did they do? They created a partnership firm. Say this firm is P and Company. P and Company. So they have created this partnership firm. Okay. Now, what do you mean by creation of a partnership firm? Creation of a partnership firm doesn't necessarily mean getting that registered anywhere. That simply means structuring of a deed. Now, what is a deed? Structuring of an understanding or an agreement. Because there are three persons involved who want to work together. So that's why what will they want? They will want to have an understanding. And an understanding in respect of what? Everything. So tomorrow, if the business is required to be run, then who will run the business? Because if three of them will run, then how the decisions will be taken? Who is going to manage what? Yes or no? So some level of understanding is required, structuring is required. Plus, if any resources are required in the business, money is required in the business. So who will bring that money? Who will bring that resource? Means in terms of assets. Yeah. If there are losses in the business, if there are profits in the business, then how will those profits and losses be shared? If let's suppose the business is wound up, say sometime in future, then what will happen to the reserves? What will happen to the assets and liabilities? Yes or no? Yeah. So there are a lot of things which need to be thought through, which need to be agreed upon. Only then this structure can work. Otherwise, what will happen? Tell me. If the structure is not put in place, if the understanding is not agreed upon, then what will happen? Tell me. Any thoughts? Any thoughts? What will happen? Very good. Ritika says conflicts will arise. So there will be disputes. Correct? So that's why for this business to function in a proper manner, what do they need? They will need a deed. They will need a deed. Deed, you can say, is an agreement, an understanding, which is technically termed as partnership deed. Partnership deed. Okay. Because if they will put down everything in writing as to each and every aspect related to the business, so will there be any dispute or will there be any matter which is left for dispute? To a great extent, that will get reduced. Yeah. Still, of course, there could be disagreements, there could always be some debates. Yeah. But of course, that can be cut down to a significant level. Yeah. So that's the thought process. Okay. Now, sometimes they may decide to get this deed registered. Okay. Sometimes. So, therefore, in this case, when you have a partnership firm, it may get registered or it may not be registered. Now, what do you mean by registered? Registered means under the relevant act, whether you call it as Indian Partnership Act or any other act. Yeah, so it may or may not be registered, but irrespective of the fact whether it is registered or not, this deed will always be there. Yes or no? Yeah. So this deed will always be there. Yeah. Wherein each and every aspect is detailed out. And if something is left out, if something is not agreed upon, then that something may lead to a dispute in future. Yeah. So that's why this deed is also prepared in a, you can say thoughtfully. Yeah. Each and every aspect is required to be looked at. Okay. Now, when it comes to a partnership firm, can we say that the partnership firm will only be limited to a particular type of business? The answer is no. They can get into any type of business. Okay. Now, here again, similar to a proprietorship firm, means similar to a sole proprietor, because this partnership firm is not necessarily required to be registered. So that's why what will happen? An audit may or may not be required. Yes or no? An audit may or may not be required. In some of the cases wherein the audit could be required, could be tax audit, means as per the requirements of income tax, because income tax will always apply. Yeah, so income tax is something which comes everywhere. So income tax can always require an audit to be performed, or maybe the bankers require this firm to produce their financial statements in an audited manner whenever it is submitted to the bank for various purposes. Huh? Yeah. So those similar requirements will also arise in case of a partnership firm. Now, in case of a partnership firm, who do you think should appoint the auditor? Tell me. Who do you think should appoint the auditor? Tell me quickly. Very good. Bhaskar says partner. Yeah, because in this case, we have partners running the show. So that's why something that you see in case of sole proprietor, wherein the proprietor appoints the auditor. In case of a partnership firm, it will be the partners appointing the auditor. Okay? It will be the partners appointing the auditor. Clear? Yeah? Now, Pallavi is saying, sir, only tax audit is required or overall? No, what do you mean by overall? Tell me. So, what do you mean by overall? Overall financial statements. See, when it comes to an audit, okay, or let's suppose if you are talking about audit as per the requirements of tax, yeah. So, when you will audit something as per the requirements of tax, so in that case, first of all, the financial statements will have to be audited. Yeah, financial statements will have to be audited. So that's why whether you call it as overall or whether you call it as partial, or you can say, sir, in case of tax audit, there is a form which is required to be filled up. Yeah, so for that submission, financial statements are required to be audited. Yeah, so that's the thing. Okay, so I can see some questions coming up. Very good. So Bhaskar is asking, sir, what's the difference between tax audit and normal audit? No, so I would say, in what context you are asking about this normal audit? Can you tell me? Yeah. So what is the meaning of normal audit as per your purposes? Okay, so what do you define normal audit as? Because accordingly, I'll be able to answer your question, because as such, there is no term called as normal audit. Huh? Yeah, so it's good to understand. Okay, so Bhaskar is saying, what is the difference between tax audit and any other audit? See, tax audit, I'm just hoping you must be knowing. If you don't know, so you can say that tax audit is something which the income tax requires for some of the entities to do. And any other audit could be the one which the partners require. Maybe the audit is not required even by income tax. Why? Because they don't meet that particular turnover, etc. criteria. Let's suppose their turnover is very limited, but still the partners want to have control over their accounts. They have an accountant who is doing the accounting, who is preparing the financial statements as well. But partners want some control. So that's why they want to appoint an auditor. So that could be one of the audit. Okay. Similarly, as we discussed, the bankers, maybe the firm has taken the loan for which submission is required to the bankers every quarter, every 6 months, again, depending on the requirement of the bank. So there again, an audit may be required. Yeah. So similarly, there could be various types of requirements for audit. And because these are going to be very specific in terms of their purpose. So depending on the purpose for which that audit will be required, auditor will have to perform his audit procedures. Understood, Bhaskar? Yeah? Bhaskar, clear? Great. Okay, so now what we have tried to discuss so far was some of the features, or you can say we just tried to understand about the partnership firm in general. Means what is a partnership firm, how does it work, how does it get structured, okay, all of those things. Now, if you would have understood all of these points, okay, so some of the audit procedures that we are going to look at, you will be able to easily design those audit procedures when it comes to a partnership firm. So let's try to get on to some of the audit procedures. Now, before starting the audit, auditor should examine what? Partnership deed. And note the provisions therein. Now, what could be the provisions in the partnership deed? Name and style under which business shall be conducted. Duration of the partnership means whether it is for a particular period, only for 5 years, only for 2 years, only for 3 years, or it's not limited in time. Amount of capital, the way this capital will be contributed. Okay. What is going to be the period for which financial statements are prepared? Means have the partners clarified? Because they can always have different period for the purposes of preparation of their books of accounts or maintaining their financial statements. Though generally in Indian scenario, you get to see that as April to March, but maybe they want to do it for a different period also. Yeah. So all of those things, where is that specified? That is always specified in the deed. Yeah. All of these things will be there in the deed. Karan is asking, sir, this tax audit or the normal audit can be done by the same auditor? Yes, of course. That can be done. The only thing is, it has to be assurance. Okay. And it should not lead to any independence restrictions. Okay. Some of the independence restrictions which you get to see in case of an auditor. Yeah. Which is coming from the requirements of Code of Ethics. So that is something you'll have to look at every time. Then I think Bhaskar and Tambeshwari have shared some points. Yes, very good. Now, provision in relation to the maintenance of books of accounts. Matters which will be considered, okay, which are required to be looked into for determining what? Profits of the firm. If any reserves are required to be created, how the depreciation will be provided. Okay. Some of those points are also required to be looked into. And where are all of these points specified? They will always be specified in the partnership deed. Borrowing capacity of the partnership. In case the partners have contributed to the capital, and in case the partners are drawing money from the firm, so what is the rate of interest at will? Interest will be charged by the firm or will have to be paid by the firm. Yeah, as the case may be. Will there be any salary payable to the partner? Or is there any restriction which has been put on the withdrawals of the partners? Yeah. duties of the partners as regards the management of the business. Means who is going to manage the business, huh? Because it may happen that if three partners are there, so all three will be involved in the management of business. But sometimes what they may decide is that one of the partner will be involved in the management of business. Again, it may vary from firm to firm. Who shall be taking care of the bank accounts? Means who shall be operating the bank accounts? If there is any surplus, so how is that surplus going to be treated? Means whether that will be reinvested somewhere, reinvested into the business, or whether that will be drawn by the partners. Yeah, some similar sort of points are required to be looked into. And why are these important? Because depending on some of these requirements, accounting would have been done. Okay, and you will be able to understand that. Means as an auditor, if you want to understand whether those have been correctly recorded in the books of accounts or not, then that will not be known to you till the time you don't go through the partnership deed. Yeah, so that's why it's an important document for any auditor, right? Okay, so then I can see some questions. Okay, so Karan is asking, so if the same auditor can do both the types of audit, then what is the benefit of doing tax audit separately? See, there's no benefit. And we didn't say that both the audits will be required. Yeah, it's just that two types of audits could be there. Yeah, but of course, if an audit is already required by tax, then the other audit is already covered there. Yeah. Then I think this name is missing. So he's asking, sir, please, no worries. Huh? So we can just talk about it separately later on. Huh? Pallavi is asking, sir, if not mentioned in the deed, then the Partnership Act applies? Yes, of course. Because they will have to have some basis to get into that point. Okay, Tambeshwari is saying, yes, sir, we have covered that earlier in school. Very good. Huh? So that will help you. See, if you will understand about this deed or this structure of partnership firm, then some of these audit requirements will become quite simple for you to understand and appreciate. Okay, now, what are the advantages of audit of a partnership firm? Now, in this case, even though these pointers have been put down, but can you just think about it? Can you just let me know what are the advantages of an audit for any type of entity? Forget about partnership deed, forget about partnership firm, forget about sole proprietorship. In general, can you just think of some of the advantages which the audit may bring in to any entity? Over to you. Tell me, what are going to be the advantages of an audit for an entity? Quickly, huh? What could be the advantages one can look at in terms of audit for an entity? Great. Kasak says trust will increase. Shini says it's all about getting into the best practices. Pranav says increases the reliability of financial statements. Very good. Yeah. Same is the point from Nitin also. Tambeshwari says any instances of fraud, if those are there, those get reduced, or at least somebody is there to look into that. Yeah. Ritika says when it comes to the accounts and overall functioning, okay, so the truth, fairness, that can be ascertained. Yeah. And I can see similar sort of points from Ankit, Ratimalini, Dilip. Very good. Huh? So now same pointers, if the question is asked as around the advantages of audit of a partnership firm, should become applicable, right? Further, if you say the financial statements, the financial reporting, the way business is going on is better monitored, so what will happen? Chances of any disputes between the partners will go down. Why? Because let's suppose, say if some profit is reported, but a partner has a objection to that, means the way that profit has been computed, he may not be very convinced. Why? Because he may think that some of the accounting errors have been done. Yeah, he could be having any sort of thought in relation to that. So some of those things will go away. Yes or no? Many a times at the time of dissolution, what do you need? Audited accounts. Okay, there again, why the audited accounts are required? Because that's considered to be the most favorable basis for closure of accounts. Reliability is increased. If any new partner wants to come in, okay, if any new partner wants to be admitted, so we'll always want to look at the audited financial statements. And needless to mention, control of the business, control over various activities, particularly around the financial reporting, is looked at. Yeah. So these are some of the advantages which could be there in terms of audit of partnership firm. Now, when it comes to the partnership firm, what are some of the points which should be specifically considered during the audit? So, one, letter of appointment. Why? Because through this letter of appointment, the scope, the timelines, the responsibilities of both the partners, or you can say the management and the auditor, yeah, they will become clear. So, of course, that is considered to be one of the very important points. So, this letter of appointment. Now, what do you call this letter of appointment as? It is no different from an engagement letter. Okay. Yeah. Similar to what you see in case of engagement letter. Yeah. Then partnership documents. Some of the documents wherein the understanding is documented. Of course, one will be the partnership deed. But if there is any addendum to that, if there are any separate minutes of the meetings of the partners, okay, so all of those documents are required to be considered by the auditor. Why? Because they become important in the context of understanding of the overall structure, the way this partnership has been designed. Yeah. Objects of partnership. There again, books of accounts. Of course, that's the most important point. Mutual interest. Mutual interest means that interest of no partner has suffered. Means it is, or the way activities of the partnership firm are going on, the way business is going on, the way financial reporting has been done, the way books of accounts are maintained, that is considering the overall objectives of the partnership firm at large. Okay, they are not really biased towards any specific partner. When it comes to the taxation, in respect of taxation, whether the provisions have been considered in an appropriate manner, whether the profits of the partners, they have been distributed the way it's required by the deed. Yeah, so whether all of those things have been taken care of or not. So when it comes to the partnership audit in particular, so some of these things are required to be focused upon. Okay. Yeah. Any questions so far? Okay. So Srini has this question. She's asking, sir, CA firms are under Partnership Act or under LLP Act? See, when it comes to the CA firms, if that's a partnership firm, then because it's a firm of chartered accountants, so that's why it will have to get registered with ICAI. That's one. Yeah. And of course, if this is an LLP, so LLP will also require registration under Companies Act. Yeah. So that depends. Huh? If it's an LLP, then of course Companies Act will add. If it's not an LLP, then I think Companies Act will not be required. Yeah, it could be on both the models, huh? Not necessarily on one model. Both the structures are there. And both the structures are quite common, even today. Huh? Though you get to see LLPs quite a lot these days, but still, there are a lot of partnership firms which are continuing today, which are not LLPs. Huh? Okay? So it's not necessary that you will always have an LLP law. It's one of the structure, you can say one of the way of getting it registered. So that's how you can treat it. Yeah. All right. So now I think we can look at one example. Okay. Yes. So if you can just look at this example and if you can just also try to answer this, please. CA Akash Virmani is auditor of a partnership firm consisting of four partners. So there is a partnership firm wherein there are four partners. And CA Akash is the auditor of that firm. During the year, one of the partners has retired and another partner has joined next day. Okay, so that means the number is same, but there's a change in the partnership. One partner left, another partner joined. Discuss any one point which shall be considered by you to ensure that financial statements of the firm are not misstated due to change of constitution of the firm. Over to you. Over to you. Okay, so very specifically, you are required to comment upon that particular point. Pranav says verify if the share of profits and the goodwill of the retiring partner have been settled. Okay, very good. What about others? Okay, so your answer should not be generic. Huh? So they are asking you in the context of this change. Okay, so Shaniz is asking, no. So I think Shani is giving one pointer. New partner has the same liability. Okay, what about others? Quickly, huh? Quickly. Tambeshwari says required to deed agreement. What do you mean by deed agreement? Required to, are you trying to say amend the agreement? Huh? Okay. Dilip says verify the settlement accounts of the retiring partner. Pallavi says examine the change in deed. Very good. Bhaskar says check partnership deed whether the changes have been made or not. Yeah. So great. So some of the things, some of the points which you just mentioned are quite relevant. Yeah. So let's try to understand. The auditor should consider provisions of retirement deed or partnership deed for date of retiring and joining of partners. It should be ensured. So what needs to be ensured? Profits are appropriately distributed up to the date of retirement. Otherwise, what will happen? The new partner will come in. If there is lack of clarity, so that may lead to a dispute later on. So in simple terms, when the partner will retire, one set of financial statements up to that date are required to be drawn. Only then these settlements will be possible or not. Yes or no? Yeah. So of course, changes need to be looked into in the deed. Settlement needs to be looked into. Profits need to be segregated. Losses, if any, those need to be segregated. But at the same time, you also need to consider the fact that all of these things will be possible when the financial statements of the firm on the date the partner retires are drawn. Otherwise, how will you do this settlement? Correct? Yeah. So these things are specifically required to be looked at. Pallavi says we prepare the revaluation account. So what do you mean by revaluation account? So we are not really getting on to the technical points okay, as around that preparation of the accounts as such. Yeah, so it's more about settlement, settlement in terms of the partner which is moving out, so that the partner which is coming in is free as far as all those previous records, accounts are concerned. Okay, okay, yeah, clear? Any questions so far? Uh, Shani is saying, sir, you can say in this case the new partner has the same liability versus the old partner, not necessarily, because they may bring in a change through which the partners may change their liability, they may change their profit sharing ratios. Okay, so this is not necessary, but of course, your point is correct in the sense that this needs to be looked at whether it's continued at the same rate or there has been any change. Okay, so that point becomes important. That's why we are saying changes in the deed are required to be looked at. Okay, what all changes have been made, because that is going to be one of the basis for the retirement and for the admission. Yeah, okay. Any questions so far? Tameshwari says amount uh, is required to be brought in by the new part. Yeah, so there could be a lot of such requirements. Amount needs to be brought in by a new partner. Old partners may also want to bring in some amount. They may want to restructure their business. There could be hundreds of points. Yeah, there could be hundred of such points. Yeah. Okay, but very, very specifically, if you have to just answer this, what will you say? So this is something which you'll have to comment upon. Okay. Yeah. Karan is asking about Karan. Can you please give this full form, or maybe the reference, where are you picking this from? Otherwise, as and when we'll move on to this point, we'll discuss. Okay. Now, continuing further on this, now please remember, we are still on the partnership, but now on the partnership, we are discussing very specifically about the partnership which is registered as LLP. Now, what is an LLP? LLP is also a kind of partnership, but LLP is a partnership which is registered under the Companies Act. Okay. So there is a specific act which deals with LLP. What do you call that as? Limited Liability Partnership Act 2008. Okay. Now, in this case, as the terminology suggests, it's a partnership firm with a limited liability. What does it mean? Liability of the partners is going to be limited. Okay. Now, because it's a partnership firm, so that's why there has to be minimum of two partners. There has to be minimum of two partners, and at least two partners should be considered as designated partners. Designated partner means, you can say, who are going to be the one who will be taking care of some of these legal requirements, or from regulatory side they are going to be the one who will be considered as taking care of those requirements. Okay, so in very simple terms, that's how you can take it. Yeah. And because various legal requirements which are going to be there, which they are going to sign off. Yeah. And because it's something which is required to be registered under the Companies Act, so that's why what will you need? These partners, similar to what you have in case of companies. Remember, in case of a company, directors have a director identification number. Yes or no? Yeah. And I think, uh, Karan, this was your question. Huh? In case of a company, directors have a director identification number. Yes or no? So similar to that, partners in case of a LLP, they need to have designated partner identification number. Okay, very similar to DIN. DIN is what? Director identification number. So in case of a company, directors will have that number. In case of a firm, which is LLP, partners will have this. Okay, why is this required? You can say because these partners will be registered. Okay, so various signatures, etc., which they will do. So they need to create this identity. It's a kind of identity which is created with the registrar of companies. Okay, yeah. Now, this LLP, yeah, could be a small or large. Now, what do you mean by small? Small means wherein the contribution of the partners does not exceed 25 lakh or such higher amount which is not exceeding 5 crore as may be prescribed, and turnover does not exceed 40 lakhs or such higher amount not exceeding 50 crores. Okay, so that's how you will define a small LLP. Now, whether the LLPs are required to maintain the books? Yes. So what do they maintain? All set of records. They will maintain ledger, receipts, payments, cash book. Okay. So that complete set they will maintain. Now comes the most relevant point in relation to audit. Now, in relation to LLP, over and above this LLP Act 2008, we have LLP Rules 2009. Yeah, which require that LLP will have to get its financial statements audited every year. Okay, but in this case, there is a cap. Every LLP is not required to get the audit done. Only those LLPs whose turnover exceed 40 lakhs rupees, or you can say, in case the turnover does not exceed 40 lakhs rupees, or the contribution does not exceed 25 lakh rupees, they will not be required to get their audit done every year. Means financial statements audit, statutory audit for these LLPs is not mandatory. Now, please remember, it's not mandatory, which means if the LLP still wants to get the financial statements audited, nobody is stopping that. Okay, it's kept optional. However, if the partners of such LLP decide to get their accounts audited, they can do that. Why? Because it's been kept optional. But if the turnover or this contribution exceed this limit, then what will happen? Audit will become mandatory for LLP. Okay? Yeah? Now, what are the advantages, purposes, need of audit? I think we have already discussed about. Yeah. So there's nothing new as far as this advantage, purpose, need is concerned. So repeatedly, if this question comes, I think this is something you can always think through. Srini is asking, sir, where do you get this DPIN generated? See, as I told you, it's similar to what you do in case of a company. So LLP will get registered with ROC, Registrar of Companies. Okay. And for doing that registration, partners of the LLP will have to get this DPIN generated. So they will have to apply for this. Where is that done? Again, Registrar of Companies. Okay, so it's the same process which is there for a company, or you can say which is there for DIN of a director in case of a company. Same process, huh? Exactly same process. Okay, so they need to apply, and once they apply, that's how they will get it. Yeah. Okay, now returns to be maintained and filed by LLP. Now, please remember, for partnership, there were a lot of general points, but for LLP, some of these specific points you may have to memorize. Yeah, but these are limited to LLP. Why? Why in case of LLP you will get these points? Because LLPs are now registered. Okay, so the moment you get registered, some of the regulatory requirements creep in. Okay, now LLPs are required to file two forms, or you can say two filings are mandatory for them. So we talked about audit. So now I'm not talking about audit. I'm talking about filing requirements, means two returns, whether the audit is performed or not. So one form which they need to file every year is called as annual return. Okay, so this annual return is in the form of Form 11, which is required to be filed within 16 days of closure of financial year. Means if 31st March is the reporting date, by 31st May, it needs to be filed. Okay, where is this filed? Again, ROC. Plus, they are also required to file statement of accounts and solvency. So there is again one form for this, that is called as Form 8. And when is that required to be filed? Within 30 days from the end of 6 months of the financial year. Means if 31st March is the reporting year, which will always be there for an LLP, so it becomes 31st October. Okay. Yeah. So these are the two filing requirements. But please remember, irrespective of whether the audit is performed or not, these returns are required to be filed by the LLP. Okay. Then, who will be appointing the auditor in case of an LLP? Who will appoint the auditor? Partners? Yeah, because it's a partnership firm. So therefore, who will appoint them? Partners. But in this case, the partners have been designated. Why? To take care of all of these requirements. So that's why we'll not say all the partners, we'll say designated partners. Okay. Yeah. All right. So now, partners may appoint the auditor if the designated partners have failed to appoint them. Auditor's duties regarding the audit of LLP. Now, please understand that LLP is nothing but a kind of partnership firm. Yes or no? So that's why if you are talking about auditor's duties, audit considerations in relation to audit of an LLP, do you think these pointers should be different from what you see in case of partnership firm? Tell me, do you think it will be different or it should be different anyways? Tell me quickly, huh? Any thoughts? Quickly? Quickly, huh? No? Yeah. So it has to be similar. In fact, if you look at all of these points, which are kind of repeated under LLP. So let me just read this. Okay. Just for you to understand and appreciate that all of these points are no different from what we have already talked quite a lot of. What is that? Engagement letter. In case of a partnership firm, it's also there. Minutes book. Why is that important? To understand any structural changes, to understand any changes in the business, any important events, transactions, if those are documented there. Agreement of LLP, what is that? Nothing but a partnership deed. So all of those points which you will see in case of partnership deed, yeah. Then the reporting requirements. Now in terms of reporting requirements, what will be the reporting requirements? Something which is specified in the deed plus the purpose for which the auditor is appointed, which is all about the financial statements only. Financial statements only. Yes or no? Yeah. So are these pointers any different from what we have already discussed? Tell me, what do you think? Are these any different? No. Yeah. So that's why every time you come across these points, what should you do? As I have advised, if you are just preparing a note, somewhere make a mark that this is quite similar to what has been discussed previously in case of partnership, in case of sole proprietorship, so that your revision time is saved. Karan is asking, sir, what is this book of minutes? Minutes means, like in case of a company, Karan, do you understand some minutes are there of the board meetings, audit committee meetings, Karan? In case of a company, do you know about minutes of meetings? Quickly, please confirm. Have you heard about this? Minutes in case of a company? No? Okay. So now, in case of a company, board of directors can meet. Okay. Audit committees when they meet. So whatever they discuss, a summary of their discussion, okay, or the discussion points are put across. They are put down on a piece of paper. That is what you call as minutes of meeting. Means you can say a summary of meetings, so that they can be referred on later on. Any action points which are required to be looked into, they are they are referred upon. Okay. So now these minutes could be in relation to any type of structure. So if the partners will meet, so what will they do? They will discuss a lot of points. Yeah, so minutes of those meetings, what will you call it as? Minutes. And if you put it across, if you write it somewhere, that is what you will call as book of minutes or minutes book. Clear? Now, why is that important? Because if the partners, if the top management is meeting, they are discussing some points, some transactions, some important events. So that this will give a good insight, good understanding to the auditor if the auditor will go through such minutes. Okay, understood? Karan is asking, like taking important notes in the live classes. I won't say taking important notes, but it's all about preparing summary of the points which are getting discussed in the live sessions. For example, today we are having this session. So there are two approaches to this. Okay, some of the points you may believe are not important and you may not write, but those could otherwise be important. Other approaches, that each and everything which is discussed, you are preparing a summary of that. Okay, whether that is important or not. Yeah. Why? Because your understanding of whether that point is important or not may be not correct. Okay. So minutes means noting down all of those points in a summarized manner. Clear? Clear? I think Ratimalini, Nitin have also shared this understanding. Yeah. Karan, clear on this? Yeah. All right. Great. Any more questions? Any more doubts if you have? Quickly, any more questions? Any more doubts? Then we'll move on to our next structure. No? Everyone clear? Ch9 is asking, sir, why we need solvency report in LLP? No, so it's not a solvency report. You can say it's a form which the LLP is required to file with the registrar. So auditor is not required to provide that report. It's only a statement wherein some of the financial information is provided. Yeah, that is for the purposes of record. Okay, that is similar to, you can say, uh, which is about the balance sheet, which is about the P&L. Similarly, you can say there's a statement which talks about solvency. Yeah? It's all about submitting the financial information of the LL. But auditor has no role to play in that except for the auditor wherever required. Okay, because that is required to be filed by the LLP entity. Clear? Okay, so now moving further. Now we'll move on to another type of entity. I think briefly we have touched upon this in the form of NGO, if you remember, in the form of trust, in the form of society. But now, very specifically, we'll be talking about these charitable institutions. Okay. Now, in relation to charitable institutions, what are some of the specific features which we will get to see? Here again, what is important for us to understand? What are going to be their specific features? What are going to be their specific requirements? Because if that is understood, then of course, a lot of points related to the audit you can think through. Now, in relation to the charitable institution, what are going to be some of the pointers? One, that will always be about the constitution. You can say the way this charitable institution is registered. Yes or no? About their internal procedures, about their internal controls, about their policies and procedures. Yeah. Depending on the way they are registered, what are the regulations which are applicable to them? If it's a trust, then there will be a trust deed, or if there are any other regulations which are applicable to them. Correct? Yeah. Okay, so now this is, of course, going to be one of the aspects. Second, and I think this is something which we have already talked about, when it comes to a charitable institution. So, what is going to be the nature of their business? Tell me. What is going to be the nature of their business? Tell me quickly. Can you think about it? What will be the nature of business? Tambeshwari says donation. Shini says service. Actually, they will not be into any business. We should say they will be carrying out activities for charitable purposes. Yeah, for social cause. Yeah, for which they will receive donations, for which people may come in, people may create a group or a society, and they may contribute some sort of membership fees, or you can say subscription. Yeah. So now some of those things which are in relation to subscription, donation, they become important for the auditor to look at. Why? Because all of these receipts are going to be the important part, because all of these receipts is what the institution or the entity will be spending. Yeah, all of these expenditures will be coming from these receipts only. Yes. Yeah. So where are these receipts coming from? Do we have internal controls in respect of those receipts? Whether the proper records are maintained for that? Yeah, whether those have been audited on a test check basis? Yeah. So some of these points in relation to charitable institutions become important. Yeah. If there are any legacies, okay, amounts which are received by reference to correspondences, grants, sometimes grants are also received. If they have invested anywhere, so what are those investments? Are there any restrictions on those investments? Remember, there are some restrictions. And if some dividend income is generated on that, some interest income is generated on that, whether that has been recorded appropriately or not. Okay. If in case there's some rent. So around the rent, what will you do? You will check the rent agreement. You will check the amount paid, whether that's been paid on time or not, whether that has been recorded in an appropriate manner or not. Yeah. Similarly, there could be some other activities which the entity may be involved into. Say, for example, there are some concerts, some dramatic performances, etc. Yeah, for which aid may be received, means grant, donations may be received, and similarly, expenditure may also be involved in respect of that. If in case there are some income tax refunds which are possible, why? Because some of the uh, cases may require deduction of TDS. Yeah, so that tax may be refunded. So what has been the basis of filing of all of those returns, how those tax have been computed, whether those returns have been filed on time or not, whether the refund has been received or not, whether the refund has been received exactly to the amount to which it should be there or not. Yeah, so all those calculations once again will be the considerations of the auditor. Why? Because these are all going to be part of the books of accounts. Expenditure. Now expenditure could be various, they could be of various types. Yeah, now in respect of expenditure, some of the expenditure could be for specific purposes for which the grants are received, for which the donation are received. Some of them could be in line with the activities of the charitable institution, means for which donations, grants are received, but which are quite general, huh? So a lot of expenses which are there. If any monies are spent on, say, assets, okay, which is in the nature of movable properties, cash and bank balances, cash and bank payments which have been made, okay, whether any funds have been contributed by the entity for special purposes, similar to what the charitable institution may get. Charitable institution may also give some grants to another charitable institute. Okay, at times it's common, huh? Maybe there is an entity which has received a grant or a donation, and how do they spend? They've given it to another charitable institution. Okay, why? Because they want to apply those funds, and that is also the requirements in most of the cases, huh? Because they can't just keep taking the money, they are also required to apply that. Okay, if the same charitable institution is not able to spend that directly, so they can do that indirectly. Yeah? Maybe some of the other charitable institutions who are spending those money, so they can give donation to them. Okay, so all of these activities are required to be properly checked. And how are these checked? In the form of books of accounts, the way they are recorded, whether those are in line with the bylaws, whether those are in line with the regulatory requirements to which that particular charitable institution will be subject to. Okay, so now this charitable institution, I would say, in three different forms we have covered. Huh? So it's a sort of repetition in a way. What is that? Can you just tell me, there are various ways, there are various forms through which we have talked about these charitable institutions in this particular chapter itself. Yes, quickly, can you just help me understand those forms? Over to you, quickly. Tambeshwari, yes, this entity prepares receipt and payment account, not receipt and expense. Okay, the moment you say expense, you should call it as income and expenditure. Yes, can you tell me the forms that we have looked at? Quickly, huh? The forms, the legal forms that we have looked at in this chapter. Over to you, quickly. What are those legal forms that we have looked at? Great. Tambeshwari says NGO, trust, society. Very good. Shrini says trust, society. Dilip says Section 8 company. Yes. So there are three forms, huh, which have come at three different places. One was NGOs. Remember NGOs we covered? And then in the previous session, we talked about trusts, societies. And today we are talking about charitable institutions. So they are all of same types. Okay. So why is it I'm trying to draw a correlation so that you can make a note of this? Why? Because at the time of revision, please understand, this will save a lot of time for you. Why? Because if you'll cover one, most of your points related to other forms will automatically be clear. So that's how you should try to save time in terms of your revision. Okay. And some of you who may be thinking, sir, this chapter is too long, there are so many technical points. So that's how you can save time on this. And you can just make sure that you don't skip this. Okay. Clear? Everyone clear? Any questions, any doubts? If you have, please let me know. Then we'll take a break. Yes, quickly. Any questions, any doubts if you have? Any questions? Over to you. No? No question? Sure? All right. So I think this question has come up. Okay. Sai, no, we'll take up this question towards the end of the session. Not now. Towards the end of the session, let's take it. Okay. Yeah. All right. So then I think we can take a break now. Yeah. Manish, let's take a break. All right, so now moving further. So I think we can now move on to this next entity, that is about educational institutions. Okay, I think something with which you are quite familiar, isn't it? Yeah. So when it comes to audit of a school or a college, university, or any other educational institute, so what are going to be the audit considerations? What are going to be the procedures? What are going to be the thoughts? Now, please remember that in a way, this is going to be the fourth form. Remember, just before the break, we discussed about three forms of NGOs. Or you can say the entities which are not working for profit. So school, college, university would also be one of them. Yeah, yes or no? Yeah, because this could also be one of the reasons, one of the purposes, one of the activities of a trust of a society. Correct? Yeah. So, therefore, most of the points that we have discussed over there, don't you think you will be able to apply here? Tell me quickly. Tell me quickly. Yeah, most of the points. What do you think? Quickly, over to you. Ritika is saying, sir, but the private schools don't work for profit. So I'm not talking about the private schools right now. I'm saying there is one aspect about the schools which you can pick up from those type of organizations also, which you can relate to. Thereby, you can pick up some of those type of procedures, some of those type of features as well. Of course, similar to a private school, there will also be private colleges, there will also be various institutes. Yeah, but idea is what? That if let's suppose a question is asked in the exam, how you can just draw a correlation and think of the audit procedures. Okay, so that's the thought process. So that's the approach. Okay. Now, when it comes to any educational institution, so there again, what is the thing you will look at? Its registration requirement. How is this registered? Whether it's registered as a trust or a society, correct? Now, in terms of its management committee, in terms of its bylaws, in terms of its registration documents, what are the purposes? What are the objectives? Okay, what are the key points in relation to various activities which are involved? Okay, now, in case it's an educational institute, so that's why other than donation, now school will also receive donations. Okay, so the donations and grants are going to be there in school also, but one form of the receipts for a school or for an educational institution will be what? Fees from the students. You can say it's a kind of revenue for them. So how do you audit this? So let's suppose if you happen to be the auditor, how will you audit this? Of course, you'll go check the records. So there will be a fee register, the number of students which are there, the fee per student which is there. Yeah, whether the receipts are issued against that or not, whether the fee is charged in line with the prescribed amounts or not. Yes, yeah, and whether that has been accounted for in an appropriate manner or not. If there are any other components in relation to that fees, for example, if there is any sort of separate collection other than the tuition fees, if there are any late payment, if there are any fines for that, okay, if along with the education, there is also a facility of hostel which is made available. So the dues in respect of hostels, okay, charges for hostel. So all of those things are required to be looked at by the auditor. So some of these things will become the audit procedures. Okay. Needless to mention, as we discussed, that grants, donations, they will also be involved. Why? Because it's again for a social purpose. So that's why this activity in general is what? That is for the benefit of public. Okay. So that's why grants, donations are very, very commonly seen as one form of receipts in respect of any educational institute. Yeah. Now, what is it that you are going to have in respect of expenses? Expenses will be in respect of various activities related to the school. Yeah. So that will be in respect of the salaries of the staff, contributions which are made in respect of various functioning, in respect of various activities of the school. Okay. If there are any such donations which have been further given, grants which are further given, okay, if there are any capital expenditure, means the amounts which are spent on assets or on acquisition of assets. Say for example, building is acquired, building is constructed, or furniture is acquired. Okay. So it's not necessarily that expenses will be there. So monies are spent not only on those expenses, but on capital items also. Correct. Now, because it's a school and because there are assets involved, so that's why you will get to see a balance sheet. Okay, so now when it comes to a balance sheet, so all of those items you'll see. So in the balance sheet, you'll have assets. Now, what could be the nature of assets? PPE could be there, advances could be there, loans could be there, liabilities could be there. Liabilities could be of various forms in respect of dues from the students, in respect of monies which are payable to the staff, in respect of monies which are payable to the vendors. So you can have various creditors, you can have salaries payable, you can have statutory liabilities. Yeah. Inventory will also be there. So depreciation on some of these assets will also be there. Yeah. So now some of these items you need to think through as to what could be there in respect of financial statements of a school. Means the balance sheet, profit and loss. Yeah. Some of these things which are prepared. Compliances. Now, compliances could be in relation to the taxation, could be in relation to various other statutory requirements, which could be related to provident fund, which could be related to income taxes, okay, which could be in relation to any other form of filing which the educational institution is required to do. Okay. Now that will again vary from entity to entity. Yeah. So any questions, any doubts in relation to this? Then we'll look at this case scenario. Huh? So I think Nitin has shared few points. Cash, food. Yes, of course, these could be some of the items relevant to audit. Ritika is saying electricity. Yeah. So all of those expenses could be there. Na? All of those admin expenses could be there. Tambeshwari is saying tuition is not included. Yes, tuition is included. And that's why we are saying fee. Okay. Fee which is collected from the students, that will have various components. Shani is asking, as these institutions are having huge endowment fund, then how these are treated as not for profit? See, the basic objective of setup of this institute or these institutions is such that that's the rationale of their establishment. So you are right, huh? So they are also making monies, they are also generating profits, but the basis which is used in terms of their incorporation, in terms of their setup, happens to be completely different. That's why what do you see for schools? You'll see that they are registered as either a trust or a society, generally, or a Section 8 company. You don't see schools getting registered as a private limited company. Understood? Yeah. Okay. All right. So now let's look at this question. You are auditor of a school operating in your city. During audit, it is noticed that fee concessions to students have been provided in substantial number of cases. Discuss how, as an auditor, you would proceed, okay, or means what is it that you'll do if you were the auditor of this particular school when you see that sort of situation coming up wherein this significant concession has been offered to the student, and that too in a significant number of cases. So what are going to be your audit considerations? Over to you quickly. What are going to be the considerations of the auditor in such a case? Great. Pranav says we will verify whether the concession have been properly accounted for. Okay. Ritika is saying inquire about it from the students that whether they have availed the concession. Okay. And we'll also correlate that with the records. Okay. Bhaskar is saying examine the proper record. Then I think Dilip says verify the fee receipts. Okay. Karan is saying verification of concession physically. So what do you mean by concession physically? You are saying the underlying documents you will check. Is it? Malu says verify the internal controls. Shrini says whether the provisions have been provided. Provisions in relation to what? Because it's a kind of reduction of the receipt. Huh? Nitin is saying eligibility will check. Okay, very good point. Anyone else? Any more thoughts? Any more thoughts? So what is it that you should look at? Tambeshwari says fee register we should check. All right, so let's look at it. Now, fee concessions have to be under proper authority of school management. That's one. Now, if you see a concession is coming up, and that too a significant for significant number of students. So as an auditor, there is a risk. What's the risk? Maybe the cashier has received full fee, but has accounted for only a part of it. Why? Because there could be an embezzlement of cash. It could be a fraud. So we are not saying it has to be a fraud. It could be a fraud. So that's why in relation to the concession, like one of you mentioned, it should be checked what are the guidelines in relation to concession. To whom that can be offered means eligibility criteria for fee concession should be looked at. Because as an auditor, once you look at that criteria only, then you will get to know as to how many students can get it and how many students cannot get it. Okay, whether that's been given to only those students who are eligible for the concession and within those permissible limits for which you will check the authority. Yeah, because if the concessions will be given, then of course it has to be as per the authority of the management of the school. Yeah. And because we are suspecting that there's a fraud risk which could be there. So that's why another very, very important point which needs to be looked at. What is that? Internal controls. Because if the internal controls of the school will be strong, then such chances in relation to this type of activity or this type of risk will go away. Yeah. And of course, as an auditor, you will want to check few cases. Means on a test check basis, you will want to check some of the instances wherein the concession has been given. Okay. So what you will do is we'll pick a few samples. Huh? That this was the full fee. So let's suppose 1000 was the full fee. 800 has been charged. So 200 not charged. It's been properly approved. And it is as per the eligibility criteria or the sanctioned mechanism which is there in respect of school. Yeah. So every time when you come across any such scenario in the exam, please remember some of these scenarios that we have discussed may not be repeated as it is. So don't think that you are going to get same type of questions. These scenarios could be changed. So every time, what do you need to do? Now, please understand some of these things that we are discussing. You don't need to memorize. You need to be logical, and you need to just think through about the understanding of that particular type of structure or that entity, because accordingly you will be able to then think through the audit procedure, that situation. Okay, and only if you are able to do that, you will be able to get onto the right audit procedure. Understood? Understood? Yeah, everyone clear? Any questions? Any questions? Then we'll move on to this next entity here. Any questions? Any questions on this? No? All right, so now moving further. Hospitals. Now, hospitals again, you can say this could be also one of the type of charitable institution. Yes or no? So once again, you may say, but sir, hospitals are running for profits also. So there again, one could be which is for charity, which is not for profit, and one could be which is for profit only. Yeah. So both the types are there. So that's why you will have to look at the features of both, and you'll have to just consider the features of both, because you can apply all of those procedures if at all the procedures are asked for. So now, what are going to be the steps? What are going to be the considerations? Now, hospitals will have patients who will be paying the fee. Yeah, those fees could be for various purposes. It could be for uh, consultation. It could be for some test. It could be some maybe some of the surgeries. Yeah. So there are various activities which are involved, for which money or fee, or you can say consultation charges are paid. Yeah. So the register of patients, or you can say the record of patients, is required to be looked at. You need to verify the receipts which are issued, invoices which are issued to them. Okay, and this you will not do for all. Only on a sample basis you will do this. Yeah. Then the cash which is collected. Okay. Now this is one of the features of hospital. In case of a hospital, you will not see that the patients are bringing in checks. Yeah, or patients are making the payments through bank. No. Generally, what do you see? Cash payments being made. So that's why it's again a very, very important feature of hospitals. Yeah. So proper cash records are maintained. Cash book is there. Excuse me. In respect of receipts. Okay. Records of patients is there. Now some of the income which they may generate. Now this is similar to any other entity. Yeah? Now if they have some surplus funds, they may invest, from which they may get dividend or interest income. Rental income they may get. Donations, once again, because it's for charitable purposes, kind of NGO. So that's why they may get donations. They may also get subscriptions from the members, because if it's an institute wherein a lot of members are there, so there will be a managing committee. So they may be paying subscription fees. Correct? Authorization and sanctions. Again, very, very important activity in respect of various expenditures which are incurred, various payments which are made, whether those are authorized or not, whether those are appropriately sanctioned or not. Yeah, again, a very important feature. Grants and TDS. Now, if in case any grants are received, whether those are for a specific purpose or not, if some TDS has been deducted, okay, what are the provisions around it? Whether that was deducted in an appropriate manner or not, and whether the refund of that becomes due, whether that has been received or not. Budgets. Now, in respect of various activities, they may be preparing their budgets. Okay, budgets in respect of various expenses, the way they require to run the hospital. So, whether all of those budgets have been reviewed or not, and the actuals, whether they are in correlation with the budgets or not. Internal checks is all about various internal controls, internal procedures which should be in place. Depreciation, now because the hospital will have a lot of assets, it will not be about only the expenses or the receipts. So that's why whether the depreciation has been charged appropriately or not. Okay, there will be a lot of registers, a lot of records which are maintained by the hospitals. Okay, some of those registers on a sample basis are required to be reviewed. Inventory, again, similar to what you see in case of other entities. Here again, a lot of inventories could be there in respect of various items. So how are those inventories maintained? Whether a proper record is there or not. Okay, whether that has been appropriately recorded in the books of accounts or not. Okay, physical verification has been carried out for that or not. And of course, wherever required, management representation is obtained in respect of the books of accounts, the financial statements, or you can say the records which are maintained by them. Yeah. So you may find that once again, a lot of points that we have discussed, they are quite generic. Okay, they are quite similar. Ritika, that is, you can say a kind of record. You can say a kind of slip. Okay, or a receipt. That's what you mean by that. Yeah. Okay. Yeah. Any questions? Any questions on this? Any questions? Everyone clear on this? Yeah. So some of these entities we are going to look at, you will find a similar points coming. Okay. And everywhere, if you'll just be able to think through as regards the structure, then most of these audit procedures or your considerations as an auditor, you will find will become very, very simple. Okay. All right. So now moving on to the next type, audit of clubs. Now forget about what is written over here. Can you just give me some pointers which you will think or which you will want to consider as an auditor in respect of clubs? I think club is something which is known to everyone. Huh? Yeah. So when you go to a club, so what is it that you get to see in terms of the way they generate receipts, in terms of the expenses they incur? Great. So Nitin says inventory. Great. Important point. Pranav says membership fees. Tambeshwari says investment. Entrance fees. Very good. Then I think Ratimalin says entrance fees. Yes, a very common thing. Malu has the same point. Dilip says entrance fees, subscription fees. Shini says annual fees. Yes. So this is about fees. What about expenses? What about expenses? These are very, very common. Huh? So in case of a club, what do you see? Entry ticket, entrance fees, and subscriptions will be there from the members. Arrears could be there. Huh? Now, because there are a lot of members, so in the past years, if they have not paid, so arrears they are paying. Yeah, arithmetical accuracy, which could be there for any entity. Yeah? Irrecoverable member dues. In some of the cases, you may say that some of the members have not paid and they are not willing to pay. Yeah, so what do you do with that? Sometimes those are waived off. Okay, so irrecoverable are in respect of that. Pricing is in respect of some of the items which the clubs will provide, means the food stuff, drinks, or any other facilities which are provided to the members. Okay, so what are the controls? What are the policies and procedures which the clubs have in place? Because all of this price is decided by whom? Club only. Yeah. Accounts of the members. Now the members will have an account. Yeah, because they may deposit some amount, they may keep utilizing that amount in respect of various activities they do, so that every time they don't have to pay this. So the ledgers of members is a very important thing which the clubs are required to maintain. then the clubs are required to purchase a lot of items, yeah, which are for the facilities for the members. So that's why all of those purchases, which will eventually get into the inventories or time expenses, yeah. So some of these things are very, very important. Now margins are in respect of the prices. So the prices which are decided depending on the policy and procedures, accordingly the margins are determined, and the same thing should be reflected in the books of accounts also. Okay, inventory we have already spoken about. In case the clubs are generating some surplus funds year on year, or maybe in a particular year, which they have invested, from which they may be getting some returns. Okay, so how are those accounted for? Okay, then the management in respect of various activities it is doing. Okay, what are the authority matrices? What are the powers? How do they function? So all of these things are going to be what? Are going to be the considerations for audit. Correct? Yeah. Karan is asking share script. Share script means it's the document about the shares. Okay. Now, I think the next one is again very, very common, something with which you are quite familiar. Yeah. A movie hall or a cinema. So now, can you just give me some pointers of audit? So let's suppose if you were the auditor of say PVR. Yeah. So that's a cinema hall. So what are going to be the audit considerations? Over to you quickly. I think everyone will have some point to offer here. Quickly, yeah. So audit of PVR, very good. So I think everyone is saying tickets. Okay, Pranav says verify the tickets booked online as well as offline. Good. Ratimalini says number of shows for the control purposes. Nitin says advertisement expenses. Very good. Ratimalini says tickets booked. Okay. Bhaskar says how to run the business. Check tickets. Assets of cinema hall. Yes. Very good. Assets will always be there. Yeah. Then I think Tambeshwari says entrance fees. Entrance fees, I won't say will always be there, but yes, of course, in some of the cases it could be there. Dipali says free passes. Yes, again, a very, very common thing you get to see over there. Pranav says some of the items which are sold like snacks, yeah, or this food stuff. Yes, again, a very important item in respect of the activities they do. Yeah, then I think Karan is saying number of tickets sold, price of ticket. So there again a pricing. Okay, Tambeshwari is saying depreciation on the asset. Yes, again a very, very important point. Ratimalini says brands which are paid for advertisement. Yes. Nitin says distributors. Yes, of course. So that is in respect of the expenses which are incurred. Okay, from which they will obtain the movie rights. Yeah. So now let's look at some of these points. Internal control mechanism in respect of all of activities. Yeah. And some of the activities they are into tickets, free passes. Okay. And in respect of the ticket charges that you see. So taxes are collected by them, which are also paid by them. Okay. Sale of tickets, advertisement, again, a very, very important activity for them. Various types of expenses they incur. And they have the assets, so that's why depreciation on those assets, advances which are paid to the distributors, okay, from which the movie rights are acquired. Okay. And a very significant item which is there in respect of movie halls is what? Restaurant or the food stuff or the snacks which are sold. Okay. So now the procedures around that, the documents around that. So these are going to be the audit considerations. Okay. Yeah. Everyone clear so far? So are you finding some of these entities which are looking at now, particularly today, to be quite simple? Isn't it? Yes or no? Yeah. So every time in a chapter, you will not find everything to be difficult. Huh? So some of these things are typical, but a lot of these points you can just see. Huh? You will be able to just think through. Huh? And some of these things could also be asked in the exam. So it's not necessary that only the tough things or maybe only those things which are going to be the legal requirement, they will always be asked. No. Okay, so Sai has also mentioned recovery of online booking collection. Yes, of course, that's correct. Now, moving further, next type, hire purchase, leasing companies. Now, can you tell me your understanding of hire purchase and leasing? I'm sure in accounts you would have covered this. Huh? You must be knowing about hire purchase business. You must be knowing about leasing business. So can you tell me your understanding? Huh? We'll get on to these points, but your understanding. Huh? Quickly, over to you. What do you understand by them? Okay, so Apur says they got to have a lease agreement. Okay. Pranav says leasing in when the lessor gives the asset to lessee for a period of time. Very good. Sai says leasing is there, but hire purchase is not there. No worries. That's, I would say, a similar sort of arrangement. Huh? Similar sort of arrangement. So you can say these are two different terms, but arrangement is quite similar. Okay. Dilip says, so taking assets on lease for a period. Or you can say giving assets. Yeah, so one is the lessor, second is the lessee. Bhaskar says liabilities. Uh, Tambeshwari says yes, sir, wherein we apply AS 19. Very good. Yes. Nitin says lesser and lessee. Very good. What about others? Quickly, huh? Please. Yeah, so you have some overview, some understanding of hire purchase, leasing. Okay, so now in case of a hire purchase agreement, what will you have? Goods are let on hire, means given on hire, and hirer has an option. So there are two parties. Hirer has an option to purchase them in accordance with the terms of the agreement, and includes an agreement under which possession of goods is delivered by the owner to a person on the condition that such person pays the agreed amount in periodical instruments. So what is that? Rent only. It's a rental arrangement. Property in the goods is to pass to such person on the payment of last installment. Such person has a right to terminate the agreement at any point of time. Now, if let's suppose you were the auditor of any such type of entity which is into the business of hire purchase, so what will you do? What will you do? First thing which becomes important for you is going to be what? Get into this agreement. Yeah, because through this agreement, auditor will get to understand about the arrangement which the hire purchaser has entered into. Yes or no? Yes or no? Yeah. So till the time the agreement is not clear, various aspects which are involved therein will not be clear. Okay. Now, in respect of hire purchase of goods, in respect of cash price which is involved, in respect of date on which the agreement should be commenced, in respect of the number of installments which are required to be paid, the goods which are there under hire purchase, all of these things, where do you get to know from? From the agreement only. And what type of agreement is this? That agreement is what you call as hire purchase agreement. Okay, so that's going to be the consideration. Now, if it's a lease, that's again one and the same thing. It's a lease agreement wherein one party, which party is that? Lessee. Lessee means tenant. You can say that. Acquires the right to use an asset for agreed period of time. From whom? Landlord. So there is one tenant, other party is landlord. So what do you call landlord as? Lessor. And tenant as lessee. So that's it. It's again a rental arrangement. But in this case, I think some of the points which are included in your study material, and I think which can really help you. Why do I say this can really help you? See, a lot of these points are in respect of the arrangement of the lease. Now, what are the types of a lease as per the accounting requirement? Ambeshwari just mentioned AS19. So I'm sure you would have gone through AS19. Huh? Yes or no? Quickly, please confirm. Quickly, AS19. Yes, Pranav says yes. Very good. So now, as per that AS19, there are so many points, isn't it? Now, all of those points you can just simply apply as the auditor. Why? Because they are going to be the features of a lease arrangement. Yes or no? So, to begin with, what will you have? To begin with, in case of a lease arrangement, what will you have? A lease agreement? Yes or no? Through which you will identify whether it's the lessor or a lessee, whether you are auditing the lessor or the lessee. Correct? Now, that lease could be of two types: finance lease or operating lease. Yes or no? Now, if that is the finance lease, its accounting is different. If that's an operating lease, its accounting is different. Correct? Yeah? Everyone, are you with me? Yes or no? Depending on the type of lease it is, its accounting will vary. Correct? Now, through the lease agreement, what do you get to know? Same, some of those points that we have looked at in case of hire purchase agreement. Through the lease agreement, you will get to know who is the lessor, who is the lessee, what's the date when the lease will commence, what is the amount which is required to be paid or to be received, what is the asset which has been transferred in respect of its right of usage to the lessee. Yeah. So all of these things, as an auditor, you will get to know from where? From the lease agreement. So that's why first point for you to look into will be what? Lease agreement. Yeah. Because that's the basis through which you will get the understanding of the transaction. You will get the understanding of the transaction. Yeah. Okay. Now, in respect of all of these arrangements which are there, let's think about the audit procedures. Now, if it's a leasing company, so you will first of all understand the object clause. Of course, object clause will be what? To lease. The leasing business will be there. Okay. Whether there exists a procedure to ascertain credit analysis of lessee, means if something is given to a lessee, so some analysis should be done. Okay. So what will you do? If you were the management, if you were the lessor, so you'll want to check whether the lessee will have a capacity, yeah, to pay the rentals. Yeah. What is their history? If there is any collateral which is available. Yeah, so some of those factors you'll look at or not, because finance lease is more of like a loan only. If that is the case, then in respect of lease agreement, you will want to go through all of those points. You will want to examine all of those points. Description of the lessor, lessee, equipment, location, okay, the rental which is involved, the equipment which is given on hire, amount of tenure, okay, late charges if any. Yeah, whether the agreement prohibits the lessee from assigning the subletting, means any subletting or sublease clause is there or not. Yeah. So all of these points, where do you get to know this from? This will come from the lease agreement only. Yeah. Now, students need to pay attention that AS19 define lease arrangements could be of two types. And you must be wondering, we already know this. Yes or no? Yeah. So this is something which you need to now apply because you already know this. Why? Because you have already covered that in accounts. So that is going to help you. That is going to help you. Why? Because as an auditor, when you will get onto the accounting requirements, so what will you verify? Whether it's a finance lease or operating lease? If it's a finance lease, so what will happen? There are various conditions which are required to be fulfilled, basis which you analyze whether it's a finance lease or not. So what are those conditions? What are those criterias? That the risk and reward should get transferred to the lessee. That's the criteria for which the standard, the accounting standard AS19 gives you some indicators. So what are those indicators? Lessee has the option to purchase the asset at a significantly lower price, bargain purchase option. Okay, or the asset will get transferred to the lessee at the end of the lease term. Lease term is for major part of economic life, or the present value of MLP amounts to at least substantially all of fair value. Leased assets are of specialized nature. Now you may be thinking, but sir, this is all accounts. Yes, because as an auditor, if you were to look at the accounting requirement, then you'll have to look at the compliance of the standard. Yes or no? Yeah. So this is something you'll have to go check. Fine. Yeah. Okay. Now, if this is a case of operating lease, so what will happen? You will just only check whether the rental income is recorded or not. Why? Because in case of an operating lease, what do? You just simply record the income because the asset continues to be there with the lessor. Correct? Now, we are also given a table. Why? Just to differentiate between these two types of leases. And you may be thinking, but sir, we already know. Yes, I understand. But some of those things which you already understand, over which you have knowledge, you need to just apply it over here. Okay, because that is going to help you. Fine. Yeah. So these points are what? Similar points which you will apply in case of your accounting requirement. The difference between operating and finance lease, and where does this difference come from? From those indicators only, from those conditions only. Yeah. For example, in case of operating lease, ownership stays with the lessor. In case of finance lease, ownership transfer option is there with the lessee. That's one of the conditions. Accounting treatment under 2 is completely different. Okay. Purchase option is given in case of finance lease. Lease term, again, in case of a finance lease, it has to be covering a significant part, substantial part of the economic life. Yeah, again, all of these things, all of these points that you look at, where are these picked from? From those criterias of evaluation of finance and operating lease. Yes or no? Everyone clear so far? Any questions, any doubts if you have? Tell me quickly. Any questions, any doubts if you have? Quickly, over to you. Yes? Yeah? Nitin, Niru, they are clear. Very good. What about others? Any questions? Yeah, so hire purchase, leases, all of these things. If let's suppose a question is asked to you, will you be able to apply the audit procedures? Will you be able to think of the pointers as around that particular situation or not? Yeah? Okay, great. Sai says yes. Ritika, Nitin, they are also saying yes. Very good. Tambeshwari is also clear. Very good. All right. So now moving on to the next type of entity. Okay, so we are talking about hotels now. Okay, now what else? I think once again with hotels, are you all familiar? Yeah, we all are familiar. What is a hotel? What is the business model? How does it operate? What are some of the considerations? Yeah, what are the challenges which could be there in respect of a hotel? Yeah, the business model of the hotel. Is that clear? Yeah. Now, as around the hotel, is there any specific regulatory requirement? Not really. Not really. Okay. Because hotel is what? Hotel is more for commercial purposes. So we are not talking about anything which is in relation to NGO or for charitable purposes or something which is associated with a trust or society. Yeah, because it's all for commercial purposes. It's all for profit purposes. Yeah, so that's why when it comes to a hotel, some of the audit procedures which you need to think through should be what? Should be that of any other entity which you'll apply as an auditor. Okay. Yeah. Okay. Now, that's one point, or you can say that's one of the approaches. So I'm just trying to help you with this approach, because if, let's suppose, for some reason you are asked some pointers, some considerations around this audit, and you forget about it. So that's how you can just apply some of those points. Okay, number one. But when it comes to any hotel, so what should you do? You should get on to that specific point. You should get on to that particular specific business. Okay, and just try to think about that particular specific business. So in case of a hotel, what are going to be some of the considerations, or you can say specific considerations, which you will find in case of a hotel only? Yeah. Now, in case of hotel, pilfering is one of the greatest problems, which may lead to revenue leakage. Means revenue is not recorded in an appropriate manner. Hotel will have a lot of items, inventory, you can say small items which are there, yeah, which are subject to fraud. So that's why one of the very important consideration when it comes to the business of the hotel happens to be the internal control on the part of the management. Now please remember, we are talking about business model. That's why when it comes to the auditor, so auditor will also want to first of all get on to those internal controls, whether those are in place or not. Because if those are in place, then of course the comfort level of the auditor will automatically increase. Yeah. So how should that be done? Through control testing. Now you may be thinking, sir, how do we do that? Remember control testing, test of controls. Have you covered or not? Test of controls. Quickly. Have you covered? Test of controls. Quickly, yeah. Internal controls, control testing. So the same thing you will use here. The only thing is, whenever you want to give some examples, some specific situations, some testing points, you will use that of hotel. For example, auditor will verify few restaurant bills, which will be there in a hotel. Yeah, some of the receipts of room booking, which will be there in a hotel. Okay, clear? Yeah. So this is one. Second, in case of a hotel, what is the business? Booking of rooms means rooms are sold, yeah, for few days, for some period. Similarly, there are some conference hall, various other halls which are there, which are again booked, from which revenue is generated, from which sale is generated by the hotel. Correct? Yes or no? Yeah. So now records of that, registers of that, receipts book, cash book, yeah, or you can say details of such sales period on period is something which the auditor needs to verify. And all of these records will be provided by whom? Of course, the management only. Yeah. Inventories. Again, a very important area in respect of hotels. Now, where are these inventories required? These are utilities which are provided in the room. Yeah, for example, sentry, for example, some of the food stuff which is provided, for example, some of the consumables which are provided in the room. Yeah, so all of these items, what are the controls of the management? Means if these are provided, if these are used, if these are consumed, and these are booked as consumption. So what are the policies and procedures which the management has put in place? Okay, so that is again one of the considerations. And of course, a physical verification for that will be required to be done as at the particular period, whenever it's there. PPE. So in case of a hotel, of course, there's a building to begin with. Yes or no? There's a building to begin with. There are a lot of items of capital nature. So the procedures around that PP, yeah, their useful life, their depreciation, the control on them, how those are utilized, physical verification of them. This will again be an important procedure. Yeah. Then we can talk about some of the expenses which will be incurred by the hotels. Expenses could be related to the staff, the labor which is employed by them. Yeah, so the payments which are made to them, whether those are in compliance with some of the basic requirements, in compliance with the appointment. Okay. Now, in case of a hotel, any other expenditure which is incurred by them happens to be those of the agents who will get them the bookings. So, therefore, charges which are paid to them, commissions which are paid to them, to those travel agents or the shops. Yeah, so that is again a very, very important item. Means whether that is in line with the bookings or not. So it should not happen that rooms are getting booked directly, but still the commissions are being paid. Yeah, so these are some of the important considerations which you get to see in case of a hotel. Clear? Everyone clear on this? Any questions, any doubts so far? Quickly. Any questions, any doubts? Okay, great. Ritika is asking, sir, auditor should ensure that the default on this account doesn't take place by suggesting proper control to the management. See, when you are saying suggestion to the management, this can always be an add-on by the auditor. But as such, the role of the auditor is not to recommend. Auditor's role is to find out if that is in place or not. Okay, if that is in place, whether that has been recorded appropriately or not. If there are any such defaults, then of course these discussions will take place with the management. And if that is the audit of financial statements, then the auditor will have to look into the financial impact in relation to some of those leakages or defaults. Okay, so that's how you'll have to put it. Clear? Ritika is asking casual labor. See, casual labor is all about the payment to the staff. Okay, so they will deploy staff. They are workers who are working. So the payment, salaries, wages which are paid to them. So that's the point. Okay. Karan, that is one and the same thing. That's used in the context of labor only. Okay. Clear? Any more questions? Any more doubts if you have? Because with this, we are done. We are through with this chapter. Yeah. So any questions, any doubts, if you have, we can discuss that now. Otherwise, we are through. We are through with this, and we are through with today's session also. Now over to your questions, over to your doubts. Yes. All right. So now I'll just move over to your questions. I can see this question coming up from Sai now. Okay. So he's asking, sir, in test your knowledge, page 9.85. Let me just go to page 9.85. Okay, so this is test your knowledge. So where are you picking this from? I can't see this. We'll have to specify question number 4. Okay, so which type is this? Is this MCQ or what? Which question? MCQ. Okay, so which MCQ? Question number 4. Question number 4 you are saying, is it? Just give me a minute and let me just go to MCQ. Okay, so MCQ 4. All right, so MCQ 4, which talks about revenue sources of union government, is it? That's the one. MCQ 4. Yeah, that's the one. Okay. So now what's the question? So Sai, what is your question now? Tell me what's the question, huh? Okay, so he's asking, sir, revenue sources for government out of direct tax, GST, custom, excise. It was given that revenue from custom duties is not going to. Okay, so let me just go through this question, huh? Quickly, huh? Okay. So now this is MCQ 4. Okay, so now consider the following revenue sources of union government. Revenue from direct taxes, GST, custom duty, and excise. Okay, so PQRS. So it says out of PQR and S, which of the following flow to Consolidated Fund of India? So out of these, which one will flow to Consolidated Fund? Okay, so then I think the answer says PQR and S. Is that the solution to my understanding? Yes or no? PQR and S. As per my understanding, that's the solution. And let me just also look at the solution if there is any disconnect. Yes, so for 4, it says D means P, Q, R, and S. All of them will go to Consolidated Fund of India. Okay, sign. Yeah. So all of our. Sign says no, sir, given as B. No, so I am not sure where are you referring that, because the solution which I am referring. So let me just take you to that solution page also. That's 9.88. Okay, which page is this? Just a minute. Yes, see. 4 is what? D. Okay, sign clear? Yeah, so maybe you are referring something else. Huh? Okay, clear? All right. Anyone else? Any more questions? Or otherwise, we can just close our discussion for today. No problem. Sai, you can. I would suggest you should look at this latest document. Please, I am not sure which document you are referring to. Karan is asking, sir, Gurukul and madrasas were also educational institutions. So we no. So I think you need to look at only the one which are given over. So we are talking about three: school, college, and university. So that's the one you need to look at. Fine. Okay. All right. So I think we can just close our discussion. Thanks everyone once again for this time and for this wonderful participation that you have shown throughout. Yeah. All right. Thanks so much. And I would advise you to just make sure that some of the things we have covered, you revise and you make, notes so that you are able to revise at the time of examination also. Fine. All right. So thanks so much. Manish, I think we can close our discussion now. Yes. Okay. Thank you.